specialty views on life support.
You've taken on the burden for his passing. Is that true?
That is right.
There's something to do with a Barbie doll.
He used to stick the old school Barbie dolls in the cake.
Oh my God, you're giving me goosebumps right now.
The radio medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer, Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network. If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical condition, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Apply for Social Security and Medicare. Mike, one of the many questions that people have as it relates to Social Security and Medicare is, what's the difference in terms of how much I earn based on when I apply?
Yeah, and there's plenty of confusion around all of this because the ages have changed over the years as we've made reforms to the Social Security program, and there's different ages for Medicare and Social Security. So first things first, for vast majority of folks now, 67 is the current full retirement age for Social Security, whereas 65 is the eligibility age for Medicare, and then you scale up or down your benefits depending on how much earlier or later you claim when it comes to Social Security.
An important thing to note, you don't have a do-over on this. Basically, when you claim Social Security, that is what you are locking yourself into. The programs where you used to be able to adjust that, They haven't been around for a while now.
No, and so, for example, if you end up claiming your benefit at 62, in addition to having penalties for how much you get in earned income, you're going to be collecting about 30% less than your full retirement benefit, whereas if you wait all the way until age 70, you'll be collecting about 124% of that full retirement age benefit.
Our guide is titled How to Apply for Social Security and Medicare, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That number again is 800-393-4001, or you can request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Happy Friday out there from the Financial Exchange. Hope everybody's doing well. It is a Jobs Friday. We got the report 96 minutes ago, and that's where we will be kicking off our day here. So, Paul, as always, we have some good, some bad, a little bit of ugly in any of these jobs reports, but generally speaking, this is one of the cleanest ones we've gotten since the government shut down. And generally speaking, I think people are taking it away as a bounce back report after a few bad ones leading up to the holidays. So let's dive right in here. As always, this is a jobs report for the prior month. It measured data back in the month of December prior to the holidays. It is comprised of two separate surveys that the government does. One is a survey of households. One is a survey of businesses. They indicate completely different things. They're not intended to be read as a combined report, although they obviously, very frequently do get reported as such. Where do you want to kick things off in terms of the most relevant data here for the jobs report?
I think the area that everyone was most focused on was the unemployment rate. So let's set the stage with this. The unemployment rate for the month of November's jobs report was 4.6%. That has been revised down to 4.5%.
Yep.
And then the report that we just got an hour and a half ago, not revised that number, but the number came in slightly lower at 4.4%. So we went from 4.6 printed to revised to 4.5 to 4.4% today. So that was encouraging to see. Largely anticipated that we were going to get that 0.1% decrease there on the unemployment number, the unemployment rate, but that really was the primary focus going to today. On the jobs added, that's another component of the jobs report that we focus on so much. We saw about 50,000 jobs added in the month of December. That was below expectations of 73,000. And then one slightly not so positive piece was going back to October where there were job losses. There was a further significant revision there where the initial print was 105,000 jobs that were lost for the month of October. That was revised down further to 173,000.
So, good, bad, ugly here. Let's start with that unemployment rate piece, because when the November data came out and we saw a 4.6% print, what I immediately voiced here on the Financial Exchange was, at that level, you are getting close again to a Somme rule recession indicator. That is when the 3-month rolling average on the unemployment rate passes 0.5% higher than the 3-month rolling average of the low over the last 12 months. We were getting there. This indicates that we are not getting there. This indicates that, that data was actually revised back downward, and the December number came in better. A 4.4% unemployment rate, while significantly weaker than pretty much anywhere we've been over the last 3 years, is a historically very low unemployment rate.
Mm-hmm.
I just want to drive that home for a moment. From the Fed's perspective of unemployment, from anyone who has lived through and worked through the last 30 years in the labor market, a 4.4% unemployment rate is quite low. I recognize if you're a 22-year-old, that doesn't feel that way. For a 22-year-old, the average unemployment rate is closer to 9%. But for an overall economy to be experiencing a 4.4% unemployment rate, it's low, borderline inflationary. So I think that's the context here. Is really solid number from that perspective. Does not indicate further labor market weakness that the Fed would need to respond to.
Right.
The job creation number, that's where I get to a very mixed bag. Like, yeah, I like to see the December bounce back, but wow, was October bad.
Really bad, yeah. And part of that, it's worthy to note that the deferred resignation program of the government that they had put together, that is influencing the number that we're seeing there. So perhaps a contributor.
Let's explain that, because it's been a year, right? So spring of last year, the federal government offered buyout packages and did layoffs of a bunch of government workers. That effectively went so that they had paychecks until September. October was the first time that they were counted in this report as not working. And so that was a big number in October. I think, again, to your point, that's pretty explainable.
Mm-hmm.
One-time event, not something that is going to likely repeat itself. I think the overall message, though, on the pace of job creation that I would take away is in the first 6 months of 2025, we were averaging about 82,000 jobs per month getting created. I don't see exactly where we are for the last 6 months of the year, but it is well below that.
Right.
It is well below that, and it has showed a continued weakening in the pace of hiring on behalf of private companies and public organizations like the federal government.
To me, to further kind of your statistics there, the stark difference between 2024 and 2025 was pretty significant when I looked at it in terms of the average number of jobs added through 2025. So this encompasses the first 6 months you talked about and the second half. It was about 49,000 jobs that were added over the course of 2025. That number in 2024, about 168,000.
So we're running half.
Right.
And 2024 was about half of what 2023 was. And so you can draw a pretty clear trend line there. And if it were to follow that trend line, we would see net job loss in 2026 if you just kind of drew a line there and continued it. Obviously, that is top of mind for the Federal Reserve. Now, the interesting piece on this is, in spite of those pretty weak hiring numbers, which again did bounce back in December, we have investors taking a look at interest rate policy and saying, well, this sure thing is up for that January 28th
That's
meeting.
immediately where I went to after the report came out, within 15 minutes, yeah.
So here's the state of play. Yesterday, when you take a look at the Chicago Mercantile Exchange, CME Group, you can take a look at Fed Fund futures there. They were pricing in an 11.1% chance of a rate cut at that January meeting, immediately cut in half. Now a 5% chance of a rate cut at that January meeting. I tend to agree. I think it was unlikely in the first place. Now extraordinarily unlikely that the Fed cuts rates at that meeting. Why? The unemployment rate is what they think is the best indicator for this labor market right now. They have said it over and over again. A, they don't trust the job creation numbers. B, they don't feel like they have a really great grasp on the state of labor supply in the country right now. They have open questions about how good their surveys are given the pace of immigration change, net migration change into the United States. They are not really certain how many 65-plus-year-olds still want to work in this labor market. And so they are really looking at that job creation number, which, by the way, is about to get their annual revisions and probably look even weaker than it was before. Sure. And they're just saying, look, we don't think that the job creation number is the best one for us to get a sense of how tight the labor market is. We need to be looking at other things like that unemployment rate, like the JOLTS report too. That's another good indicator. And I think this report really confirms for them that, hey, further rate cuts right now, probably not needed on an emergency basis.
Yeah, you wouldn't need to see that unemployment rate, which would have been a shock, tick upwards to have the CME futures and for the Fed fund cut at the end of the month dramatically change, and that wasn't the case. And that was my interpretation, Mike, looking over this report. This is further evidence that it probably makes sense at the end of January to stay the course and allow for more data to trickle in before making any other decisions on the rate front.
Grade this thing for me. What are you giving it?
I would say B minus.
I was at a B plus maybe. The drop in the unemployment rate I think gave me a slightly better grade on that. But this jobs report is one that at least kneecaps the argument of a rising unemployment rate and a Somme rule recession again. And I think you're seeing some of that positivity maybe in early trading here. Again, it did not set off alarm bells with investors that, hey, we're heading towards a recession, at least so far. So the jobs report for December, again, headline news here, 4.4% unemployment rate, job creation pace of 54,000?
50,000 for the month of
50,000 for the month of December. That job creation was lower than anticipated, but got some help from that lower unemployment rate, and I think that's really the piece that investors are taking away today. Let's take a quick break. When we come back, I want to stay on the idea of the labor market, specifically moving over to the positive productivity boom that we have seen over the last few years. Is AI causing it? Can we continue to expect it? That's next on the Financial Exchange.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. This is a message for families who've been putting off their estate planning from the elder law attorneys at Cushing & Dolan. One of the biggest myths about long-term care is that if you didn't plan 5 years ahead, you're out of options. That's simply not true. When a health crisis hits and a loved one needs nursing home care, many families panic and start writing checks for care that may cost over $10,000 a month. The reality is, there may still be meaningful legal options available, even when planning starts late. Cushing & Dolan have just released a new guide called Long-Term Care Planning for Procrastinators. It breaks down what the 5-year look-back really means and what steps can still be considered before making decisions that can be incredibly costly. If you're worried about protecting your family and securing your financial future, call Cushing & Dolan at 866-848-5699 to get your free guide today. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your days snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Social Security and Medicare are oftentimes lumped together, but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage as they can impact premiums. premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Hey, if you missed any of our shows from this week, you can find them on our YouTube page. We stream the show live every day on YouTube, but also archive every hour and all of our newsworthy interviews and discussions. Go to YouTube, search for the Financial Exchange, and hit that subscribe button.
Two somewhat breaking news stories. One, Supreme Court, it was theorized they might be announcing their ruling on the President Trump's tariffs today. It's been clarified that they will not be doing that tariff ruling today. Presumably they've already ruled. They're just not announcing the ruling so far. So we'll keep you tuned there, but I mean, looks like it could be any day now.
Sure.
Second big breaking news story for all our New England. Is this just a New England company? I don't know where they are located.
Their headquarters is Manchester, Connecticut.
Bob's Discount Furniture looking for an IPO in 2026. So we were talking yesterday about how could be a heating up IPO market this year, and
you got SpaceX, Anthropic,
Bob's.
And Bob's.
Just toss them right into the same group, yeah. So I want to talk about productivity. So first off, we have to kind of define it. It's pretty obvious, but productivity is measured by, how much dollar output there is per hour worked. And this is kind of the holy grail when it comes to an economy because it's how an economy develops. I know there are plenty other good measures of well-being in an economy, but if you're trying to figure out, hey, can an economy truly grow? This is the holy grail because it is improving quality of life if you get productivity booms. You can also get growth out of a growing population. Obviously, that will do it. But the productivity piece is a huge one. And so we have seen a productivity boom for the last several years. And as measured, we've been coming in at 2.3% over the course of the last few years. That compares to a 1.1% productivity pace of increase during the 2010s decade.
Right.
And so, obviously everybody's throwing up their hands and saying, okay, what's causing this? We can measure it. We can measure the output of it. But anything in terms of figuring out what's causing it is a guess at this stage. Obviously, the first one that anybody wants to blame it on is AI.
Yeah, right.
Why wouldn't you want to blame it on AI? We're spending trillions of dollars on developing this technology. Hopefully, we're getting something out of it. And we may be. I think there could be something to that. Here are the counter arguments to it being an AI story. One, The surge in productivity started in the spring of 2023.
Mm-hmm.
Raise your hand if you're listening and we're using ChatGPT in March of 2023, because
it was released in November of 2022. So that means you were in the first
you were an
6 to 8
early
months.
adopter.
Yeah.
And furthermore, keep your hand raised if you can measure how much
But
more
if you're driving,
productive-
keep it on the wheel.
Well, yeah. If you're driving, keep it on the wheel. Good point, Paul. But keep your hand raised if you can measure how much more productive you were from ChatGPT in your paid job. Oh, that's 1 in a million. That's very few people.
Yeah.
So I don't know that maybe we can blame the continued productivity boom on AI, but the early ones, I don't think so.
I'm not even willing to go there with it at all. I just think it's too early in the adoption period for it to be.
Even in 2026? Or 2025?
Yeah, I don't think I can. I really don't think I can get there yet. To explain such a broad, I mean, we're talking about a size of an economy as massive as the U.S. to have such broad adoption that we increase productivity by a pretty significant clip. I'm just not willing to say that if it's part of the pie at all, it's a really small piece of it, if anything. And I'm just not sure we can get there yet because, yes, there's more. The use has picked up a lot, but that productivity measurement, I just find it a little harder to believe. I think that the factors that you could lean on a little bit more heavily as to why we're seeing that productivity output increase is the capital tightening cycle that we went through, where we were in an economy with very low interest rates and there was a tremendous amount of labor hoarding that came out after that period. So the pandemic hits, interest rates come down significantly. You then have the economy reopen and a ton of demand to hire workers back. During that low interest rate environment, you had people spending and borrowing at a very high clip, businesses running at unprofitable levels. But when that capital tightenings changed, where interest rates went up to 5%, there was a lot more efficiency and looking and scrutinization by companies on their balance sheets and on their businesses to perhaps not take on as much hiring and to be a little bit more efficient and look at productivity a bit more. Part of it. I'm not saying that's all of it.
Yeah, so that has been one theory that's been tossed around is, hey, in 2021, 2022, 2023, it was tough to find workers. So if there's a way you can make your workers more efficient, it paid to do so because you didn't need to hire another person and signing bonus, really hefty wage in order to get them on board. This is how boring my mind is, but like the garbage truck was driving around my neighborhood today, and I was looking at it and thinking through myself like, it's a very different garbage truck than the Sopranos garbage truck that had 2 guys in the front seat plus a couple guys in the back hauling the trash into it. No, it was one guy with a mechanical arm that grabs the trash cans and tosses it in there. What used to be between 2 and 4 workers is now 1 for at least this one garbage company. So I can buy that. There's probably bigger investment in robotics and modernization in the workforce in the early stages of COVID for all sorts of reasons. Social distancing, requirements that states were putting into place to say, hey, you can't have all your workers congregating in this one area. So perhaps that force towards efficiency during COVID, part of which might be robotics, part of which might just be, innovative ways of getting people more productive. Maybe we're seeing some of that now. Again, these are all theories.
Right.
I don't have any better one than anybody else is proposing. Other economists are calling something a 10-year dividend. Kind of like this idea. So here's the idea. Companies over the last few years, because of that tightness in the labor market, really worried about losing their workers. We talked about labor hoarding. Now we're talking about individuals who are job hoarding, who are hugging their jobs and not wanting to leave. The theory here would be, hey, if the tenure at your company is now much longer because there's not this labor turnover story that you were seeing back in 2020, for example, and now you have these workers that have been in their jobs and not leaving for 3, 4, 5 years, do they just get better at the jobs? Are they just naturally better at the jobs and more efficient than they were in year 1 when you hired them?
I think most of us can agree that you do get better at your job as your experience grows. It's certainly a first year to a third year. That's a massive difference.
Darn well better. If you haven't gotten more efficient in your job after 5 years, then you're not likely going to have a job for very long. So, look, I think Any and all of these can be contributing factors, and I just broke another pen because that's what I do when I get excited. But
It also,
Tucker, how many pens have you witnessed me break and just little pieces of it just go flying off into the air?
You come into our studio, and the amount of pens that are broken, it's
pretty fascinating.
It's a high tally.
We've got to take a quick break. Wall Street Watch coming up next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Retirement comes with a lot of exciting freedom, but also with some permanent decisions. 2 of the most important ones are when to file for Social Security and how to set up your Medicare coverage. Claim Social Security too early and your monthly check may be permanently reduced. Missing Medicare enrollment deadlines might mean significant penalties and gaps in coverage. We have a new guide available called How to Apply for Social Security and Medicare. It breaks down when you can apply, what information you'll need, and how these decisions fit into a smart, coordinated retirement plan. Get your copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And we're talking about last-minute nursing home lessons that can help save your assets. What can be done last minute to save your home and your liquid assets when one spouse is entering the nursing home?
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk. But at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset, keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
The December jobs report is here, and markets are modestly in positive territory after the Labor Department reported 50,000 jobs were added last month, softer than forecasts of 73,000. The unemployment rate fell to 4.4%, better than the 4.5% estimate. Right now, the Dow is up nearly 0.4% or 188 points higher. S&P 500 is up just over 0.5% or 37 points higher. NASDAQ up over 0.2% or 159 points higher. Russell 2000 is up by about 1/3%. 10-year Treasury yield down 1 basis point at 4.169%. Crude oil up nearly 2.5% higher, trading at $59.17 a barrel. Intel stock is up over 8% now after President Trump said the government is taking a near 10% stake in the chip maker after discussions about the company's future. Meanwhile, nuclear power companies, including Vistra and Oklo, are both rallying 14% after Meta announced agreements with the companies in addition to TerraPower as part of Meta's efforts to secure necessary resources for its AI ambitions. Meta stock, by the way, is up by about 0.5%. Elsewhere, General Motors revealed they would record a $7.1 billion loss for the final quarter of 2025, primarily from its investments in electric vehicles. Last month, competitor Ford said it expected to take $19.5 billion in charges, mostly tied to its EV business. GM shares are down over 3%. And Johnson & Johnson agreed to lower drug prices for U.S. patients in an agreement with the Trump administration, similar to other pharmaceutical companies like GSX, Merck, and Novartis. J&J stock is flat at the moment. I'm Tucker Silva, and that is Wall Street Watch.
I love pieces like this. Wall Street Journal reports that the stock market rally isn't just about tech anymore. Funny enough, we were talking about themes for 2026 on one of the last shows of the year, Chuck and I were, and I brought this up as one of the themes that I think many experts are talking about is, hey, we're going to see the stock market rally broaden out into other areas. And I kept hearing it, and I really continue to see very little evidence of it. I think it's possible, but I would just say let's all treat all this with a heavy dose of skepticism, because
this is ridiculous.
go ahead.
This is so absurd. I feel like doing the show now for several years. I don't know what the tally is, that they've run this playbook. You kind of get through a cycle where the Santa Claus rally pieces come out, and then you go to the beginning of the year. We've had 6 trading days so far, and they're quoting performance of different sectors, saying that industrials and energy have outperformed tech. It's been 6 days. Can we at least run this story when it's been 6 months? 6 days is not a reasonable sample size to say that now it's not tech's turn anymore.
By the way, it's been like 5 1/4 of a day.
Okay. Thank you for the adjustment. Look back at the last 7 years of the S&P 500 sector performance, and you will see that the technology sector has been either number 1 or number 2 in terms of performance for the 5 of the last 7 years. And oh, by the way, when it was number 2 for 2 of those 7 years, the telecommunications sector, which is far from your traditional AT&T and Verizon stuff. It's basically Facebook and Google and Netflix. Those were the number one. So this idea that it's not about tech anymore because of 5.25 days of trading drives me absolutely insane that they write this piece. Like, I'm just not willing to have, I guess I just had the conversation about it, but I'm not willing to buy it until we get at least 6 months, and then I'm willing to give it an ounce of credibility.
Yeah, this story is preposterous.
Yeah.
Just going to throw it out there. And not to poo-poo any utility investors out there or people who are really excited about the energy sector. Maybe. But to write a piece that says, the headline, the stock market rally isn't just about tech anymore. After 5 days and an hour and 8 minutes of trading.
You're really into the precise measurements. You had 96 minutes on the jobs report when you led off with it today.
You said 6 days of trading.
It's dead wrong.
You're just wrong. So I thought it was important to correct you on it. It's a preposterous story to write. I hope we do get a broadening out. That would make me feel a little bit better about the rally that we've been on for the last 3 years.
Right.
But to be very clear, the rally that we have been on over the last 3 years has been all about tech and specifically all about AI.
Right.
And when you buy, an index that tries to replicate the market-weighted stocks of the U.S. stock market, you are making a bet on AI. Plain and simple. Like, you go take a look at any of this stuff, and that's where I think stories like this are not only foolhardy, but they're a little bit dangerous too, is because when you go buy, for instance, you can't buy the S&P 500 index, but you can buy, funds that replicate it. You are putting, close to half of that money into big giant tech companies that are making massive bets on artificial intelligence. And so to paint it as anything else, I think is disingenuous.
Right.
Hopefully it broadens out. Hopefully it changes. But stop writing stories 5 days into trading that are going to tell me how the markets are going to perform for the rest of the year. Because last year, it wasn't this story. It was a different story. It was, the stock market went down for the first 3 days of the year. And when that happens, look out, because this is what happens, for the rest of the year when this happens. And guess what? The stocks went up like 17% for the year.
Yep.
So don't tell me, don't tell me this. This is preposterous. As we mentioned earlier, the Supreme Court, when will they be ruling on tariffs? I don't know, but not today. But I was asked, I was speaking with Portland affiliate in an interview this morning, and folks over at WGAN, thanks for listening. The question was raised, like, okay, what the heck does this mean if it does happen? Like, what happens if the Supreme Court comes out tomorrow and says, the tariffs that President Trump put into place in April are illegal and we are striking them down? What are the next order questions about all of that?
Great. What did you say? I'm glad I didn't get asked it.
So my answer was, first and foremost, I don't know which way the Supreme Court's going to rule. I think obviously they have provided a fair bit of deference to the executive branch over the last few years, so I don't think there's any foregone conclusions about which direction they rule. Right. You can look at recent rulings one way or the other to say they were going to rule one way versus the other. They ruled against Joe Biden on the idea of student loan cancellation. That was a fairly big expansion of executive power, as is this. So, which way will they rule? I don't know. I have no sense of
So
the
you
idea.
dodged the question.
Well, no, but then the next question after that is, okay, what happens to all the tariffs that were already collected? That's the first order question in my mind is, okay, you're resetting the clock on all these companies. What about the tariffs that have been collected for the last 9 months? That was tens of billions of dollars.
$300 billion estimated.
Hundreds of billions of dollars.
$200 billion, $300 billion, yeah.
So are we going to suddenly refund that and just inject stimulus into the economy of a few $100 billion? Maybe. I don't have an answer here. How are you going to do it? It's been insinuated that would be tossed to the lower courts to figure out, so probably nothing immediate. Second question immediately after that, okay, what is the white... If they are overruled. If they're not overruled, then we're right back where we started.
Business as usual, yeah.
But if they are overruled... then what does the White House do? Is this going to continue to be something they pound the table on? Because there are plenty of other methods for the White House to pass new tariffs on all sorts of different products. Probably not in the same way country by country as they did, but are they going to stick with this as the issue that they want to basically campaign on as they head into 2026? Or do they basically say, hey, Supreme Court ruled against us, nothing we can do about it, we're going to move on to the next important thing when it comes to affordability? I don't know.
It would be hard to imagine that they do that. You had mentioned that they do seem to have some other arrows in their quiver in terms of attacking this tariff issue, because I'm not as certain as to what the recourse. My view on this has always been, all right, if they turn it over, then I'll dive in and try and figure out what the next step is.
I mean, as the market always does, they're looking forward on this. And I don't think, there's no stock market investor that has well, there might be, but there's no stock market investor that knows which way the court's going to rule on this. They're weighing and betting on the possibility of this being overruled and largely seeing that as a net positive for publicly traded companies.
Sure.
And so if the tariffs stay in place, it does beg the question, or raise the question, I don't know which, are there some companies that are overvalued right now? So, could you see some drop off in stock prices if the tariffs are upheld? I think that's an open question as well. Let's take a quick break. When we come back, a little bit of Fed talk is next on the Financial Exchange.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
Social Security and Medicare are oftentimes lumped together, but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage, as they can impact premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When a loved one needs a nursing home, decisions need to be made quickly. If you haven't started planning yet, get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn how to make smart decisions and avoid unnecessary expenses. Call 866-848-5699 to get your free guide today. That's 866-848-5699, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes, and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your days snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. The DAV 5K raised over $150,000 last year, but we still need your help. You can support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
So we talked a little bit about the Fed following the jobs report this morning. Again, for the highlights, 4.4% unemployment rate, 50,000 jobs created. And just that this Federal Reserve that's in place today, unlikely to act in terms of interest rate changes based on a jobs report like that. And that's being priced into markets now. That having been said, this Fed chair and this Federal Reserve Board is having some, senior year kind of senioritis at the moment because they are on their way out. At least Jay Powell is on his way out. His last Federal Reserve meeting that he oversees will be in April. And so the question is then being raised, okay, you have, no matter who is appointed to the Federal Reserve, because we don't have an answer for the chairperson, you are very likely to have somebody who sees much more eye to eye with the president, or at least claims that they see more eye to eye with the president when it comes to interest rate setting policy. Therefore, I would expect lower rates because of that, but will we get it? That is, I feel like this is being overstated in terms of the likelihood that rates continue to come down in a dramatic fashion.
Because people not being aware of the consensus approach that they need to take.
Well, not even the consensus approach. It's a vote.
Right.
It's a 12-person vote. Even if you're not a good consensus builder, even if you are the best consensus builder out there, it's not some conversation that then, they say, well, 12, it seems to me like all the voting members agree with me.
Like the jurors locked in and have to come out with a verdict one way or another.
So I don't think is as much a foregone conclusion that rates are going to be dramatically lower by the end of this year. When we do take a look, fast forwarding all the way to the December meeting, and this does assume a new appointment at the head of the Federal Reserve, the most likely outcome, which again, this isn't terribly useful for actually determining what's going to happen, but the most likely outcome that people are betting on right now is that rates are 0.5% lower than where they are today. It's not a lot of cutting. The appointees that President Trump has been talking about, Stephen Myron, who's on the board now, who's a Trump appointee, they've been talking about 1.5% rate cuts. So, markets are clearly not buying it, I think, is the message here. And it also helps explain some of the actions that the president announced either this morning or overnight when it comes to bond buying and mortgage rates that we'll be covering later in the show.
If you've been dreaming about a getaway that feels far away but easy to get to, it's time to start thinking about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport is required and there's no money to exchange. Just pack your bags and go. Spend your days snorkeling, sailing, hiking, or simply relaxing by the water. In your evenings, enjoying local cuisine, live music, and warm island breezes. Explore St. Croix, St. Thomas, and St. John, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today at visitusvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Paul, you ever heard of the company Geely?
Not until this morning.
So most
like
have
that
not. It's a
crappy movie with Ben Affleck and Jennifer Lopez, Geely, that was done back in the 2000s.
Yeah, spelled slightly differently. So this is a Chinese car maker, and I agree with you. Most people have never heard of him, but they are wide owner of a whole bunch of brands, including it's Volvo, right, that they own in the United States. So,
definitely heard of them and drove that car around for many years.
So the announcement from Geely, or the rumors from Geely, is that they intend to expand into the United States, or at least make an assessment to do so within the next 24 to 36 months. Now, there's a reason that you don't see any Chinese branded cars sold in the United States today. It's because we tariff the living hell out of them. So there is no ban on Chinese-owned cars being sold in the United States because, again, if you drive a Volvo today, you own a Chinese-owned car. It's a division of Geely, but it is wholly owned by, or majorly owned by, Geely, and they direct the company what to do. They just happen to get manufactured here in the U.S. Why I think this is interesting and relevant, one is the timing, right? Like, we are trying to improve relations with China, make sure we can still source rare earths. Might this be an olive branch that the Trump administration is considering? Hey, come invest in domestic manufacturing here, and we'll actually let you sell your cars here.
You think he would allow? There's no chance, right? A Chinese EV?
What's
here?
the difference? They own Volvo. They direct them exactly what to do.
We don't know necessarily. I mean, that still has like a Swedish sort of.
It's a wholly owned subsidiary. Like, what is the real difference?
I don't know if he'd go. I don't know if he'd go for it.
In either case, why I think this is fascinating. Jim Farley, after visiting China, I think in 2024, his quotes, he's the CEO of Ford. The experience was the most humbling thing I have ever seen. Chinese EVs are far superior in technology, cost, and build quality. They pose an existential threat to Western automakers and dominate the global EV landscape.
Yeah.
That's what American car makers are up against because, like it or not, I think a combination of hybrid and more electrification is probably the future for even the U.S. auto market, or a larger portion of it. And I think gas-powered cars are going to be around for 30 years. I just think that EVs are going to slowly make up a larger portion of the total.
If these Chinese ones come through at $20,000 and proliferate throughout the United States.
They wouldn't, because you'd have U.S. workers manufacturing them.
Right.
But this is an interesting one. I think something to keep an eye on, and I'm not as convinced that they will continue to be banned as Paul seems to be. Quick break. A lot more to cover in the second hour of the Financial Exchange.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide available this month titled How to Apply for Social Security and Medicare. Mike, when we talk about actually determining when to apply, there are a few different factors that go into it, but I think really the specifics of, hey, if I want money at date X, when do I apply is kind of at the crux of this.
Oh, sure. And, oftentimes when you go to apply, they will actually tell you that they're backdating your application to the date that you apply. And so your first check might include a few checks of Social Security. You do have to be specific about when you request the actual start date. The good news is you do get a prorated increase for, we talk about this in years, but you do get a prorated increase for every month that you end up delaying your Social Security benefit. And you can be highly specific about when you actually want the income to start.
How does one go about determining what age they actually should start Social Security?
Yeah, look, every actuary out there will tell you this is all a life expectancy question and calculation. I'll tell you there's more to it than that, but it is highly specific to each individual. When am I retiring? When is my spouse retiring? When do I actually need this money to kick in? And what is my backup plan for covering my expenses if it doesn't kick in right away? So yes, life expectancy, a major factor in the decision, but there are other questions to be answered as well.
Our guide is titled How to Apply for Social Security and Medicare, and the ways that you can request it. There's 2 of them. First, you can call 800-393 800-405-4001. The second way, you can go to armstrongadvisory.com. Again, that phone number is 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. From the other law attorneys at Cushing & Dolan, here's something you need to hear. Most people think long-term care planning is something they'll get to someday, until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Happy Jobs Friday here from the Financial Exchange. We've got markets in positive territory, shifting into a higher gear here. S&P's up, closing in on 0.5%. NASDAQ up over 0.5% right now. It's Mike, Paul, and Tucker with you. And our top story of the day is the jobs report that was released at 8:30 a.m. this morning. Generally being received pretty positively. 4.4% unemployment rate, 50,000 jobs created, a few revisions made to previous reports as well. One that made the November jobs picture not look quite as weak with a revision down on the unemployment rate. Another making the October job situation look worse than it was with 173,000 jobs eliminated in the month of October. Investors seem to be taking this as a encouraging sign for the labor market, one that will likely pause Fed action on interest rates at the next meeting later this month. Wage growth was fine. I'm just trying to think of any other big highlights from this jobs report, but I think that just about summarizes it. The unemployment rate, which the Fed and its chairperson, Jerome Powell, has themselves claimed to be the most important thing from this report, went down. Mm-hmm. And that broke the trend line, and I think can be seen as a positive story here. And it once again raises this question is, which direction is the labor market truly heading? Because 2 years ago, it showed signs of flashing warning signs. You saw the unemployment rate increase at a pretty quick pace, and we were left there wondering, hey, is this a sign of something new, or is this a normalization? Lo and behold, it was a pretty clear normalization that we got in 2024. 2025, we saw similar warning signs, especially in the second half of last year when the job creation pace dramatically slowed, the unemployment rate continued to tick up. This would be the first indication that once again we are seeing further normalization rather than free fall.
Yes.
Need some confirmation, but I think that's what this report and a few of the reports that we got over this week have indicated thus far. Anything else to add on jobs, Paul?
No, I think you hit all the main points there.
There were some rumors that perhaps the Supreme Court would release their ruling on tariffs today. That has been clarified that will not be happening, but literally could be any day here. So we will see when we get an announcement from them on the lawsuits against the Trump administration and their imposed tariffs. And overnight, you had a pretty big other move from the White House when it comes to interest rates. So again, clarifying how interest rates typically float and work. The Federal Reserve generally uses the Fed funds target rate as one of the tools they use to affect the economy in different ways. And they have this dual mandate of inflation and unemployment, and they target it based on, a number of their tools, but the biggest one being the interest rate setting policy.
Right.
And then also the statements that they make. Overnight, what the president did was continue his talk of home affordability. Earlier this week, he proposed banning large corporations from buying single-family homes. Today, telling Fannie and Freddie Mae to Freddie Mac to go and buy $200 billion worth of mortgage debt. So let's lay it out simply here. Why would you, as president, want these agencies to go and do this, plain and simple?
If they are to buy more bonds, that eats up the available inventory and should drive down interest rates for the mortgages out, the mortgage interest rates down there by affecting some of the supply side of things.
So we have some recent experience with this.
Mm-hmm.
Back in the early stages of COVID, the Federal Reserve embarked on a bond buying program. Every month, they were buying tens of billions of dollars.
Was it 40 billion, 50 billion, something in that range?
Yeah, and they were doing it every month, and they were doing it on a schedule, and they were buying both treasuries as well as government agency. Mortgage bonds, I believe, is what they were buying, is
yes.
Mortgage-backed securities and treasury
Correct.
bonds in order to artificially hold those longer-term yields down during an economic crisis. Generally, something that is not, at least from what I can recall, ever been commanded by the White House to go and do this, and runs, I wouldn't say directly in contradiction to what the Fed is doing right now, but the Fed is talking about a pause in some of their policies, and this is another government agency going out there and trying to keep artificially interest rates lower. Now, I don't know how much success they're going to have in this, to be clear. When we talk about $200 billion, it is undoubtedly a large sum of money. They have the cash on hand to be able to do this. It's about 2% of the market.
Yep.
Unlike the Federal Reserve, these government agencies can't just print money and continue this bond buying program in perpetuity. So might it bring down mortgage rates a little bit in the short term? Yeah, I think very clearly that is the intent here is, hey, if you add buyers to this market, then, naturally the interest rate should come down just by supply and demand. How much will it? Because, today you're seeing yields pop up a little bit, a slight increase in some of those. And so I think some open questions on how successful this will be, but the theme here is pretty consistent. The president wants to make home affordability
a big focus for 2026.
A big focus for 2026. Yeah. I think undoubtedly that is the message to take away here. Other, just things that are noticeable with this. It has been a goal of the president's to spin these out of the government. Mm-hmm. These agencies have been under much more direct government control since the great financial crisis in 2008. And the idea here was, hey, maybe we can IPO these things sometime in the future and make these so that they are not so beholden to government policy, future governments. The idea was, maybe we can move forward with an initial public offering of Fannie and Freddie. That's taking a very big backseat with action like this.
Certainly. So you would not think to be embarking on this road of taking them public if you wanted them to buy $200 billion of mortgage.
Absolutely. Yeah. So, that is, I think, what comes to mind with all this. There's a very clear intent. So when you read that President Trump directing Fannie and Freddie to buy $200 billion worth of mortgage debt, what's that mean? Plain and simple, trying to bring down mortgage rates.
Yep.
Some companies, by the way, moving in response to this. Publicly traded companies are moving up on this news. You do have, some mortgage lenders specifically moving pretty big on this. Rocket companies, Loan Depot, Rose in early trading. I don't know where they are now. And the yield on the 10-year Treasury currently down to 4.161%. So, again, mortgage rates take a little while to update. I think that they do end up probably coming down on this. But how substantially and in what time frame is a very big question. And okay, so let's say we get mortgage rates down to 5.8% on this. Mm-hmm. It will make things more affordable.
Right.
I don't know that it changes the narrative around home affordability. I don't know where that threshold is, but I don't think it's at 5.8 or 5.9.
No, you have, I forget what the recent numbers on it, but let's call at least, it seems like more than half of the country is still sitting with those really desirable 4% or lower mortgages from yesteryear of 2019, 2020, and that sort of era. So getting it down to 5.8, while that's an improvement and perhaps would create some more transaction activity on the buy side of things, that decline is not enough to do it. It may spark activity, but it's not going to be the solution. What is brought up here in another piece out of Barron's, which I think is a good way to look at it, and we've mentioned this on the show before, to me, the easiest way to attack this issue would be in terms of legislation and regulation. That would be, while I recognize that many housing decisions are done at the local level, if there could be policy changes that encourage further development of housing or lower some of the parameters that are, put together for putting mortgages in place, that would be a good step to try and get some increase on the inventory side of things.
Yeah, but quite honestly, I don't think it's likely to happen, right? I mean, to be plain here, the idea of the federal government stepping on the toes of state and local governments and saying, hey, we are going to now control your zoning or control, or incentivize different zoning to build more homes, I find unlikely. And so you're seeing these executive actions. You're seeing things like, populist ideas like banning corporations from buying homes. I'm not sure that there's much else to be done here, right? Like we are sitting at a point now. I want to make this clear because it doesn't feel real to those of us listening in the Midwest or Northeast of the United States. But in November of 2025, there were, how do I phrase this? Nearly 94% as many homes for sale as there were in November of 2019. I know they are not as affordable as they were in November of 2019, but that is going to come. The affordability problem is going to fix itself over a period of time, and the more mechanisms you toss in there to try and fix it faster are going to have downstream impacts that we haven't quite thought of yet. If you artificially try and keep interest rates lower right now, are they going to need to snap back higher a few years from now because of inflation? If you try and put into place a corporate ban on buying homes, what are you going to do the next time there's a crisis and you need those corporate buyers to bail you out? I think there are just so many downstream effects here. The real sustainable path for me is if you want to do something on housing, then like Paul said, have an intelligent debate about what that means and what it means for what communities look like. But that is not something that we seem to be willing to do on the federal level. So instead, I think that's going to have to be done locality by locality.
You got to do something to boost try and boost the inventory. That's a problem that dates back, 16 years of underdevelopment?
Yes.
So to me, like, you think about the Northeast, even if we get back to higher inventory levels, it's still going to be expensive to buy around here because there's so few options available and there's going to be a lot of competition. I just don't know how you change that.
I go back to it. You don't, because that's what people want.
Right.
They don't want dense housing developments in the Northeast. And there's environmental and all sorts of reasons behind that, but that is the reality. Quick break. When we come back, a little bit trivia next on the Financial Exchange.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. When a loved one needs a nursing home, decisions need to be made quickly. If you haven't started planning yet, get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn how to make smart decisions and avoid unnecessary expenses. Call 866-848-5699 to get your free guide today. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Retirement comes with a lot of exciting freedom, but also with some permanent decisions. 2 of the most important ones are when to file for Social Security and how to set up your Medicare coverage. Claim Social Security too early and your monthly check may be permanently reduced. Missing Medicare enrollment deadlines might mean significant penalties and gaps in coverage. We have a new guide available called How to Apply for Social Security and Medicare. It breaks down when you can apply, what information you'll need, and how these decisions fit into a smart, coordinated retirement plan. Get your copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all.
Visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Experience America's Caribbean and fall naturally in rhythm with the heartbeat of the islands while enjoying incredible beaches, world-class cuisine, and unforgettable sunsets. The weather is perfect all year round, so head to visitusvi.com and book your trip to St. Croix, St. Thomas, or St. John. Enjoy one or all three and enjoy the vacation of a lifetime. The USVI is America's Caribbean paradise. Plan your winter escape now. Visit usvi.com. That's visit usvi.com. Time for trivia here on the Financial Exchange. And on this day back in 1969, the first test flight of the Concorde supersonic jet took place. Concorde jets were capable of flying at Mach 2, or twice the speed of sound, and crossing the Atlantic in under 4 hours. So, trivia question today. What year did the Concorde supersonic jets retire? Once again, what year did the Concorde supersonic jets retire? Be the third person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the third correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
General Motors taking a $6 billion hit tied to electric vehicles, continuing to see demand for these things just fall off a cliff. I some interesting context here. I just spent the last 2 weeks shopping for an EV. We decided on one that is not a General Motors vehicle, but we did look at Chevys, we looked at Hyundais, and we bought a Ford. There were a lot of incentives to get these things off the lot. Let me just put it that way.
You got some follow-up calls.
Got a few follow-up calls. And we're talking, on the Hyundai especially, I was looking at potentially $15,000 off of MSRP to take a previous model year. I think it might have been even a 2024 model year that was new. Mm-hmm. We're talking about fairly steep discounts, and when you see stories like this, you can guess why. But GM taking a $6 billion charge on its EV business. That follows a charge that Ford took on their EV business, basically seeing these sales crater since the expiration of the EV tax credit of $7,500 that was in place until September of last year. I don't know that there's much else to be said about this. Again, we ended up buying an EV for our household. We have 2 gas-powered vehicles. We need 3 vehicles just based on hauling our kids all over New England. So we ended up buying an EV for our third car that's primarily going to be a commuter. Very happy with it. I've enjoyed driving other EVs before. I think I'll be happy with this one. But generally speaking, these companies have all poured a lot of money into these EV businesses and are very rapidly finding that without the incentives in place, pretty big mismatch between their supply and demand from consumers.
Yeah, not too much more to add. You did hit a lot of the major points. It's only 6% of GM's sales are EVs, and if you look at where gas prices sit today, it's hard when you're under $3 a gallon to really make a huge push for EVs. And then you talk about all the policy changes too. It's a tougher spot for them right now.
What continues to surprise me, they all kind of copied Tesla. Mm-hmm. And so in my mind, the reason that things like Chevy Super Cruise or GM Super Cruise and Ford Blue Cruise exist is because Tesla did it first and they felt they needed to match that. And so most of these car companies are primarily putting those really cool pieces of technology exclusively into their electric vehicles, and I just don't get it. To me, that is a huge selling point in a car. I know I'm in kind of rare company with this stuff, but I don't really understand why they put it in there, and the only context I have is that they feel like they need to compete with Teslas, or at least they did feel like they needed to compete with Teslas, when in fact I think the self-driving car technology is pretty darn cool and something that a lot of people buying all sorts of different commuter cars would really like. That's where it's helpful, is commuting. It's not like it's really going to help you on your drive to the grocery store, but if you're driving a long haul 30, 40 mile commute with stop and go traffic into Boston every day, man, that technology is pretty useful.
Sure.
It really does make a difference, at least from my experience, in not having to constantly monitor the road in such an exhausting fashion as you need to when you're driving, for instance, anywhere on 95 from Maine to Florida. So, yeah, GM and many others kind of reshaping that business, and we will see what comes next in the vehicle market. I still think that Toyota really has a leg up on all these guys with the, investments that they have made into their hybrid vehicle space. They are pretty far beyond everybody else. Pricing isn't all that out of whack, and I think the other guys have some catch up to do to
and the discipline
there.
that they showed when in the 2020s everyone wanted to talk EVs.
Everyone wanted to be Tesla, and Toyota said no thank you. Quick break. Wall Street Watch is next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Social Security and Medicare are oftentimes lumped together, but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage as they can impact premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-3 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in positive territory after the December jobs report revealed 50,000 jobs were added in December, softer than forecasts of 73,000. The unemployment rate fell to 4.4%, better than estimates of 4.5%. Right now, the Dow is up about 0.4% or 151 points. S&P 500 also up 0.4% or 30 points. NASDAQ up 0.6% or 143 points higher. Russell 2000 is up nearly 1% now. 10-year Treasury yield down 1 basis point at 4.173%. And crude oil up nearly 3% now, trading at $59.38 a barrel. Intel shares are rallying 6% after President Trump said yesterday he finished a great meeting with CEO Lip-Bu Tan. The U.S. government took a 10% stake in Intel through an $8.5 billion back in August. Meanwhile, nuclear power companies, including Vistra and Oklo, are both rallying over 12% after Meta announced agreements with the companies in addition to TerraPower as part of Meta's efforts to secure necessary resources for its AI ambitions. Meta stock is up modestly, and General Motors revealed it would record a $7.1 billion loss for the final quarter of 2025, primarily from its investments in electric vehicles. Last month, competitor Ford said it expected to take $19.5 billion in charges, mostly tied to its EV business. GM shares are down nearly 3%. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: what year did the Concorde supersonic jets retire? That'll be 2003. Timothy from Shrewsbury, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Timothy. And we play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
While Tucker stole a little bit of the thunder here, I do still want to talk about Vistra Corp and Oklo. So not household names, Vistra is a current operator of retail electricity, a few nuclear power plants. Oklo is more of a startup. They are a designer of small modular nuclear reactors based in California, startup in 2013. Bill Gates backed TerraPower. Sorry. But these two companies are moving up big today. 13% on Oklo, 12.4% on Vistra. This is a fairly significant deal, and we've talked a lot about the energy requirements needed here. It is, if we talk about a bottleneck or constraint for the U.S. AI industry, it's not so much the semiconductors. Yeah, we talk about RAM price and memory storage prices going up, but the electricity problem seems to be a growing one for this industry. And when you talk to the experts in this space who are saying, hey, we want to construct data centers, the number one answer they're getting is, yeah, but are you going to be able to hook up to the power grid? Mm-hmm. And so now you have Meta putting big dollars into this, enough to drive these stock prices up again. We talk about hypothetical a lot, but this is real. The stock prices are moving 12 or 13% on this newly announced deal for them. Again,
the stock prices are moving. There hasn't been any money made yet, but
there is not. The two things that I think are interesting about this: one, what's this going to continue to do to consumer electricity prices? You are competing. I know not you directly, but you are competing for electricity with Facebook now. They got deeper pockets than you. This is a finite resource right now, right? I don't mean, yes, you can create more electricity, we can build more nuclear power plants, but in the immediate term, electricity is a finite resource that we do not have a lot of capability to dramatically scale up. It is going to increase prices regionally, nationally, etc. More and more communities pushing back against this. The other big question that I have is, if you buy that we are in an AI arms race with China, there's one big competitive advantage that the United States has: chip design. Mm-hmm. We build and design far more efficient chips that we do not allow to be sold, at least en masse, to China. They get funneled in there, they get stolen and moved across borders illegally, but by and large, Chinese companies do not have the ability to go buy a ton of NVIDIA Blackwell chips. Google, Facebook, Amazon all do. Mm-hmm. China has one big competitive advantage over the United States.
Way more electricity.
Way more electricity, way more capacity for new electricity, and the ability to just tell their citizens, hey, we're building a dam here, you're out of here, see you later. Yep. We don't do that in the United States, thank God. But that is the competitive advantage, and I don't think that, I am certainly not qualified to tell you which advantage is more important to the development of the next new profitable AI tool that the whole world is going to want to make. But if you buy that this is an arms race, that's what you're up against, is better designed chips here in the United States. Maybe we've got some creative competitive advantage that has been proven over the years in the U.S. compared to China. China has a giant competitive advantage when it comes to generating electricity. And so they might have far less efficient semiconductors and data centers that run these models. I'm not sure how much that matters when you can construct a new nuclear power plant in China in something like 18 months.
Right. Yeah, it is. That is what is at stake in one of the biggest arms race that we'll be focusing on over the next few years. It is really significant.
I want to talk to folks about the brand new guide from the Armstrong Advisory Group. We put one together this month on what we deem to be the most frequent questions we get from clients, especially those that are heading towards retirement, and they're all about Social Security and Medicare. These are two programs that apply to almost every working American once they get to that key age. And this guide is all about how to apply for the programs, what sort of documentation you're going to need. If you are divorced, if you are a widower or a widow, what sort of documentation are you going to need when you apply for Social Security, when you apply for Medicare? What are the specific ages that you need to be focused on? When do you need to apply? How does Part A work if you are still working? These are all very frequent questions that Paul gets, that I get on a weekly basis. We put together a guide for you to try and answer some of them. The name of the guide, How to Apply for Social Security and Medicare. It's our new guide for January 2026. It's free. You can get it by calling us at 800-393-4001. Again, our brand new guide on Social Security and Medicare. You can request it online at armstrongadvisory.com, or you can call us at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
I had to help my mother-in-law enroll into Medicare Part A. I should have just given her the guide.
Yeah.
Would have saved her the time.
Missed opportunity there, Paul. I'm sure she would have loved that.
No,
Ma, no help for you. Here, take this thing figured out on your own.
Just kidding.
No, you're not.
I owe her at least that. She helps a lot with the kids, so it's a trade-off.
That's actually a reasonable trade-off. The state of California is, if you thought that the millionaires tax in Massachusetts was going to be around,
billionaires tax.
Wait until you hear about the billionaires tax in California. So very early stages here, but honestly, I'm not sure there's good reason to believe this wouldn't pass. They are talking about a 5% one-time wealth tax in California on anyone worth more than $1 billion who is a resident.
I believe there are 220 some odd billionaires in California. I thought I had read.
It's a lot of dough.
Yeah.
That would be coming in here. The questions that I had, initially I was thinking about constitutionality. I don't think there's anything there. I know that's been raised before, but Paul, you have a car.
Mm-hmm.
You pay an excise tax?
I'm a billionaire.
Paul, you're a billionaire.
Tell us.
We all own cars.
An excise tax.
You pay an excise tax. That's not based on your income. It's based on your property.
Right.
This isn't all that different. Now, would they be able to say, hey, you own a home in Texas and we're counting that as part of your wealth and assessing your tax on it? I doubt it. Massachusetts I think Massachusetts tried something similar with their estate tax and they got that kicked out. So I doubt they'd be able to do something like that. But if you are Jensen Huang and you live in California, own multiple homes and own, 60% of a company headquartered in California, I don't know that there's a constitutional issue here. I think there's a massive wealth flight issue that California is going to face with this because I'm sure there are there are a number of billionaires who have already announced they are going to leave the state out of concern that this might pass.
Oh, you have to if you're in their shoes. Yeah.
I mean, you're talking about billions of dollars being
and if
charged
you're a
to your
billionaire,
taxes.
I bet you have other properties that you could easily make your primary residence pretty quickly.
Yeah, I mean, we talked about this with the millionaires tax, and I was kind of theorizing, like, okay, how much do you have to be worth to just say I'm going to move to Portsmouth, New Hampshire, and avoid this, and just take my helicopter to Boston every day? If you're a billionaire, it's not even a question. Like, you already own the home in Florida. You just got to change a few records over. So it'll be interesting to see if this actually goes anywhere and how dramatic the effect would be. The governor has actually expressed concerns about this. He's not in favor of the billionaires tax, it seems. They are just in the signature stage of setting this up, but this would easily be the most significant tax on the ultra wealthy that we've seen at any state level, by far.
Definitely.
By far, and would really reshape the conversation there. Let's take a quick break. Paul LaMonica's waiting for us next from Barron's. We'll be right back.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com. This is a message for families who've been putting off their estate planning from the elder law attorneys at Cushing & Dolan. One of the biggest myths about long-term care is that if you didn't plan 5 years ahead, you're out of options. That's simply not true. When a health crisis hits and a loved one needs nursing home care, many families panic and start writing checks for care that may cost over $10,000 a month. The reality is, there may still be meaningful legal options available, even when planning starts late. Cushing & Dolan have just released a new guide called Long-Term Care Planning for Procrastinators. It breaks down what the 5-year look-back really means and what steps can still be considered before making decisions that can be incredibly costly. If you're worried about protecting your family and securing your financial future, call Cushing & Dolan at 866-848-5699 to get your free guide today. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Social Security and Medicare are oftentimes lumped together but may be handled separately, and depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage as they can impact premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
As promised, we are joined by Paul LaManica from Barron's to talk a little bit about a recent company's IPO. Paul, thanks so much for joining us.
Yeah, thank you very much. Appreciate it.
Paul, obviously this year is rumored 2026 to be a huge year for IPOs. Rumor has it you could see SpaceX, Databricks, and some other Anthropic, some really large company IPOs. But we're covering here a recent IPO of a company called Wealthfront that was a little bit more lackluster than some of these other big names would anticipate their performance being on the public market entry. Give us a little bit of background, Paul, first about Wealthfront, who they are and what they do, and then just give us some context on their recent public offering.
Yeah, definitely. I mean, obviously, Wealthfront, much smaller company than the ones you named that are rumored to be 2026 IPO candidates. Wealthfront is, a wealth management firm. I think a lot of people might recognize it for their quote unquote robo advisor type product, using, AI, help, come up with portfolios for investors. They went public in December at about $14 a share, and the stock has declined since then, even though we've had this rally in the broader market. But what's really interesting and perhaps maybe concerning is that you had several investment bankers, Wall Street firms, launch coverage of the stock this week. And while there are some fairly bullish ones, the analyst at Goldman Sachs, has a price target of just 14.50 a share, which is below where the price was trading just a few days ago. And he has a kind of a neutral rating on it. His concern is that one of the products that is popular is this high yield savings product, and that might be something that, with bond yields coming down, the possibility of more Fed rate cuts, that might be something that investors aren't as interested in at a time where they could be looking for yield elsewhere.
Yeah, Paul, it seems like part of their calling card is the money market interest rate that they're able to offer, and that's hyper competitive. I mean, it's hard to really, it seems like, differentiate yourself that much there. You mentioned the robo-advisor piece, which is something that isn't necessarily a new concept, but you did mention here in this piece something regarding a new mortgage offering. What does that entail, and could that add any legs to the stock?
Yeah, that's going to be something that I think is interesting because Wealthfront has a lot of what analysts refer to as kind of a younger, digitally native, millennial Gen Z demographic. These are the types of people that might be finally in at prime age of potentially looking for a house, and then obviously the mortgage that goes with that. So that's why some analysts have buy and outperform ratings on the stock, because there is the hope that the offering mortgages is a very nascent part of the business that could grow pretty rapidly. So that's potentially an area for Wealthfront to increase its customer base. And I think that, it goes without saying, would probably be a stickier, higher margin type of business than what you're seeing with these the cash yield type products. And even I think the hope is that if you lock in some customers to have a mortgage, that they may also want to use some of their extra income on the side to be investing in stocks and ETFs.
Sure, take up more wallet share. That's Paul LaMonica from Barron's talking to us about Wealthfront. Paul, thank you so much for your time and have a fantastic weekend.
Thanks a lot. Same to you guys. Appreciate it.
CES wraps up today, the Consumer Electronics Show, and Wirecutter's got a summary for us on the good, the bad, and the ugly there. They said there are a ton of robots, so many dancing robots. There was a robot that could fold laundry pretty poorly, deal cards very slowly, play table tennis for some reason, and do mixed martial arts. The top of the list that they put out there, CES debuted a company that is putting out a BlackBerry-like smartphone, Clicks Communicator, going to be running on Android, looks just like a BlackBerry and has a physical keyboard. Don't know what the market looks like. They highlighted a stair-climbing robot vacuum.
Stair-climbing robot vacuum. Okay.
Pretty cool.
All right, you got to vacuum those stairs.
Well, I mean, if I wanted to vacuum my upstairs and downstairs, now I can buy one robot instead of the six that I currently own.
That Roomba.
The 6 Roombas that I currently own. The other highlight that I put in here, which was big headline disappointment in the reality, it's a robot lawnmower with lasers. And immediately my mind
blades?
went to Austin Powers with little robots with lasers on their heads, but instead you just have a robot that runs on LiDAR. So lasers to detect stuff that's in your lawn that are going to mow it.
Laser.
Other than that, I didn't see much that they highlighted that got me all that excited. I mean, I think the idea of the robot lawnmower is pretty cool, but we've already had it for a few years, so not all that new. And they did highlight that, hey, while the $10,000 folding laundry robot is pretty clunky and slow, that if they figured out how to get this far, a few years from now, maybe we'll all have a laundry folding robot taking care of things for us.
My wife would love that.
Markets are up more than 0.5% as we close out the show today on a Jobs Friday. We'll be back at it on Monday. Have a great weekend, everybody.